Hi, I'm Christopher Terry, CEO of iMarkets Live, and in this video, we are going to discuss the introduction to Forex. What is Forex? Forex means FX, it means foreign exchange, or it just means Forex. What it actually means is the exchange of one country's currency to another country's currency. For example, if you've traveled outside of your country, and we have a global audience, and let's just say you're in the United States, and you've traveled from the United States to Europe, you are traveling to another country and you're going to sell your dollars and buy euro. How does that work? You go to the currency exchange and you say, I want to buy 1,000 euro, and they're going to give you a price. And right now the price at this time is $1.23. So to buy that 1,000 euro, it's going to cost you $1,230 because the euro is stronger than the United States dollar. So you give the clerk at the currency exchange booth $1,000, $1,230, and you come back. You go to Europe. Now, when you're leaving Europe and you're coming back to the United States, let's just say the price is $1.22, right? So since you're coming from Europe back to the United States, you're actually going to buy your currency back at a stronger price because the dollar got stronger and the euro got weaker. So taking a look at the currency exchange in a bigger scope, this is a multi-trillion-dollar a day market. It allows us as individuals, there's banks, institution, funds, for instance, hedge funds, there's big insurance companies, there's countries that bet on their currencies. So we are able to take advantage of these fluctuations, whether it's on a daily basis or what we call an intraday basis. Let me just show you. Let's take this on an hourly chart. Doesn't seem like much there, does it? Okay. Let's fix this. Okay, let me just didn't plan for that to happen, but that's okay. It's not a big deal, right? 1 second out of the video. All right, so we're looking at this on what we call a 60-minute time frame, which means each bar is 60 minutes. And this market continuously moves up and down. It's very volatile. It's ever moving 24 hours a day, 5 days a week. It starts on Sunday night in New York, or in New York, it opens on Sunday night and closes in New York on Friday night. Now it starts in Sydney, goes to Tokyo, London, New York, but basically since we're in America, since we as traders, and I trade in America, from the New York time frame, we always count it from New York. But it does start with Sydney, Australia, goes to Tokyo, London, and then the New York sessions. And we'll discuss that in another video. Essentially, Forex or foreign exchange, you're trading and different world currencies. So let's take a look at some of them. What do I mean? Okay, we have major currencies, and I'm showing them to you right here. So let's take a look, a little peek at how great this opportunity is to trade Forex. The Australian dollar, the Canadian dollar, the Swiss franc, the Japanese yen, the New Zealand dollar, the US dollar, the euro, the British pound. All right, you can see all these different markets. So let's start with the US dollar. The US dollar is basically, okay, the US dollar is the main currency that everything surrounds itself with. For instance, the US dollar, Japanese yen, the US dollar, Swiss franc, CHF means Swiss franc, the US dollar, Canadian dollar, the New Zealand dollar, US dollar, the British pound, US dollar, and the euro, US dollar, and the Australian US dollar. So these countries all connected to the US dollar because the US dollar is the main currency and it surrounds itself around 70 or 80% of all transactions in the foreign exchange markets. Each of these currencies have their own price versus the US dollar. For instance, the Japanese yen has its own price versus the US dollar, whereas the Swiss franc has its own price. And they're all connected around the same US dollar. Those are called pairs. Now, we also have countries that cross their currency. So we take in the Australian dollar, US dollar, and the Canadian dollar, US dollar, and it ends up crossing and becoming an AUD USD, its own symbol, or a cross with its own price. So each of them are attached to the US dollar. They come up with one price, and this is it. And you can see the Australian crosses with Swiss franc and Japanese yen, and as we go down further, you can see the euro crosses with the Canadian dollars. These are all major currencies, so the pairs are with the US dollar attachments to other currencies, and the crosses, or major crosses, are these the major currencies crossing with one another that are not US dollar based. All right, so for example, EUR USD and USD JPY both create the EUR JPY and a new price. Now, I'm not going to go through the configurations here, but essentially we are able to trade all of this. Now typically it's roughly around $10 per what we call a pip, and we're going to discuss this in the future video, but we make money when these little increments change. The last digit, you see that? When these digits change, that's what we make money on, when the markets change and we pick the right direction. So taking a look here at the GBP NZD, this is a cross, and we can see this market moves continuously, giving and providing opportunity. Typically, we don't invest into Forex, we trade Forex because it's a highly volatile market and it's based on countries' conditions versus other countries' conditions, both economically and obviously with all the situations that go on in the planet. You just have to be real about it, and that's the way it is. They have their markets, and we take positions with a known risk. For instance, if we felt the market's going to go up, we would put a known risk, a limited risk in it, in case the fact that this market collapsed. So we love trading these different markets. They're very exciting to trade. And looking at this, the Forex market offers us plenty of opportunity. It's the most liquid market in the world. And what better to trade than currency? Money is exciting. And this is called the spot Forex market. For iMarkets Live, when we take positions in the spot market, we take small positions over a bigger picture chart. We do not what is called scalp. When you're looking at a market that on a very, very small time frame, for instance, say you look at it on a 5-minute chart, a trader, the bid and ask is typically so wide that it makes it difficult. So we'd want to look at a much larger time frame with Forex. This is great for those of you that want to take advantage of a market that you don't have to be in and out right away, that we can get in for hours and for days and sit on a position and be comfortable, that we don't have to have that minute-to-minute stress. Well, some people don't like that. Some people do. I actually particularly like the minute-to-minute work. I also like the day-to-day work. So what's great is for both our signal service, for those of you that are on that, we take longer term trades, and also for those that are learning, it's a great market to do technical analysis on. And we're going to speak about that more in other videos. And I just want to conclude with welcome to iMarkets Live and welcome to the introduction to Forex. In our next video, we are going to discuss introduction to the futures market.